For another rate hike, markets are anticipating a downshift to 25 basis points for this increase. But our next guest thinks economic conditions favor a 50-point hike. Joining us now is Mohammed El-Erian, president of Queen's College at Cambridge and chief economic advisor to Allianz and Gramercy Fund Management. Mohammed, it's great to see you. Good morning.
Good morning.
So you think the time is not right for a downshift. Why?
Yeah, first, I think they will downshift. I think we'll get 25 basis points. I'd be shocked if they did anything else, given what they've signaled. That is what they're going to do. Is that what they should do? I don't think so. I think they should do 50. There's several reasons for that. Some of it has to do with risk management on the policy side. Some of it has to do with the likelihood that inflation may get sticky. And some of it has to do with their credibility. Look, it's balanced, but on the whole, I think 50 would have been better. But I think that's an irrelevant discussion because they will do 25.
So you think that essentially they need to move the calendar up, that they need to, increase the velocity of these rate hikes to get inflation more under control because you see it as potentially getting entrenched as it spreads into services?
And they have a window. The tragedy of this whole cycle has been that they've missed windows. They've missed two big windows, one in 2021 when they mischaracterized inflation as transitory, and the second one in 2022 when they started very timid. They have another window. Economic data in the US has been better than expected. Financial conditions have loosened significantly. We are back to the March 2022 levels of financial conditions overall. So they have a window. I'd rather they get the hikes out of the way now than wait for later on when the economy could be weaker.
But Larry Summers says that the Fed essentially should pump the brakes, saying they're driving the vehicle on a very, very foggy night. He says there's so much uncertainty already in the economy that the Fed needs to pause and take stock of what it's already done. Why? Is he wrong?
Yeah, and that's the view also of Fed Chair Powell when he gives us this really powerful image that we are all in a dark room feeling our way around. That's absolutely right, but there's a clock ticking. So we have to balance feeling our way around and driving down the fog with what I think is the likelihood that that fog will get even more down the road. So we have more visibility today than I think we'll have in about 4 to 6 months about economic growth. And many analysts on Wall Street have shifted to that view.
But Mohammed, some of the looser financial conditions that you talk about, I mean, there's just been a general sigh of relief or an exhale in the markets in the last few weeks because there was an expectation that maybe Europe had avoided a recession, had avoided a worst case scenario. But then this morning, you get an unexpected contraction in the German economy in the fourth quarter. You have higher than expected inflation in Spain, all ahead of the ECB later this week as well. So do you think that now the thesis is changing about where the global economy is?
I don't think it's changing, but it's an illustration of the uncertainty. Kayla, think of it this way. We have a range. Over here is the soft landing, where we all want to be. Over here is the hard landing, which is either a recession or even worse, stagflation. And the data so far has been tipping us slowly towards a soft landing. And today's data out of Europe has taken us somewhat back. Like you said, Germany contracted when people expected it not to do so. And the Spanish inflation number is actually quite worrisome. So yes, we are in a situation where the data is important, but the reality is that we are facing a lot of uncertainty on the three things: inflation, growth, and policy. We have 3 central bank meetings this week, so it's going to be fascinating to see what they signal, the ECB, the Fed, and the Bank of England.
So how soon do you think you'll be able to make a judgment, Mohammed, whether the Fed has successfully landed the plane?
Not for a while, and that's why this is really hard. The problem with being data dependent when your measures act with a lag is that it takes you time to figure out whether you've soft landed or not. So we're not going to know for a while. And that takes me back to the risk management. If you ask yourself the following, I don't want to make a mistake, but the probability of making a mistake is high because there's so many moving pieces in the domestic and the global economy. Which mistake is most recoverable? That's a really important question. It's not just for policymakers, but for all of us facing this uncertainty.
And arguably, the Fed has more tools to be able to undo rate hikes that move too quickly versus the singular tool that it has to combat inflation via these rate hikes. How soon, though, do you think the Fed might need to reverse course? I mean, the market believes that the Fed funds rate is going to start going lower midway through this year.
Yes, it's very unusual to have the market not believing what has been very uniform and very consistent forward policy guidance from the Fed. Like you say, the market thinks the Fed is going to have to cut. The Fed tells us that they're staying there at the peak level when they get there for 2023. Look, Kayla, you raised a really important point. There's something else going on that we should be very happy about. And that is we've had $500 billion of balance sheet contraction, and it's been like watching paint dry. It hasn't done anything. It certainly hasn't countered very loose financial conditions. So it is good that we're getting the balance sheet down in such an orderly fashion.
Well, we need to leave the conversation there. We'll see what the Fed announces on Wednesday, and the tenor of Chair Powell and the rest of the committee in that statement. Mohammed, we appreciate your time this morning. Mohammed El-Erian.
Thank you very much.
Mike?
All right, coming up, the new take a look at how some key commodities have fared this month. Gold, you see, on pace for its third positive month in a row. Copper has been on a tear, tracking for its best month in almost 2 years. And on the other side of things, natural gas, that was one of the star performers last year, is on pace for its fourth negative month out of 5. Stay tuned. You're watching Squawk Box on CNBC.